So we have another interesting session coming in is equity investing and alternate risk financing. So alternative risk financing allows insurers to create specially designed products for targeted risk pools, and we all know equity capital is necessary for the growth of the industry. How can these two methods also help with insurance inclusion? Let's hear from our experts. I would like to call upon Santosh Singh, partner and MD Intellecap. A round of applause. Santosh is a partner and managing director at Intellecap and leads its agriculture and climate solutions practices. He has more than 20 years of experience in scaling up market-based solutions for climate change mitigation and adaptation. Welcome, Santosh. We have next Dr. Sabine Kapasi, co-founder and MD of Enira Consulting. Welcome, Doc. She's a seasoned healthcare professional renowned for her expertise in finance, data science, and the global healthcare industry. With a distinguished career spanning across various sectors, she brings a unique blend of skills and experience to the table, consistently driving transformation change in healthcare. Welcome, Doc. Then we have Rahil Rangwala, managing partner Accion Venture Lab. It's a leading early stage investors in inclusive fintech, providing seed first capital and strategic support to innovative startups that are meeting the financial needs of underserved globally. Welcome. And we have our moderator, Subhajit Mandal. He's the co-founder of Cybersyria and also co-founder of India InsurTech Association. Welcome, over to you.
Thank you so much. See quite a few people on the side. Please feel free to take the seat, guys. And thanks a lot to my panel members for taking the time out. Really appreciate it. Some of you have, but we were discussing, have voted. Some have not voted, will vote later in the day. And we were discussing maybe voting will be a much better topic and we'll get a lot of inclusive questions from the group. But jokes aside, let me start with Santosh here. Santosh, how can impact investing models, and given your experience across World Bank, across where you are at Intellecap right now, or develop finance can be leveraged specifically for insurance inclusion in India's tier 2 and tier 3 cities?
Thanks for the opportunity. And I think since you spoke about election, tier 2 and tier 3 cities are the one who drives the election. So, so I think if you look at the insurance, we can safely say that tier 3 and tier 2 cities are completely underinsured. They don't have the right kind of product. And even if the products are there, they are not adopted that well. And we are looking at a very systemic risk, not because insurance as product is not being adopted, but insurance I see as a product that enables multiple other products, has implication on that. So considering that impact, the impact investment or development finance interventions have been primarily to see what systemic changes we can do so that these products can work there. So one track that basically we have been looking at is how you can focus on data analytics and new kind of product development with the new kind of data sets that are, coming up. India is very rich, country with the data. So we have been seeing a lot of interventions in investing into those tech and data companies that are enabling new kind of insurance product. We have seen something like Gram Cover, SkyMet, and those have been kind of building blocks of it. The second kind of intervention we are seeing is in the distribution, how we can distribute the products more effectively. So we are looking at very many models that are trying to solve the distribution challenge and the pricing challenge with some innovative pricing. But if you have to kind of think of tier 2 and tier 3 cities achieving this insurance sector goals, we are looking at two big problems. I hinted at affordability and the right kind of product. Affordability, unfortunately, right now, has to be sold by a mixture of public, blended capital, and not purely from commercial capital, because the kind of population segment you're talking about, the people who are earning, say, less than 5,000 rupees or 10,000 rupees or less a month, they are not going to be, paying the premium that is often going to be beyond their reach. So three problems that we're trying to solve. A, how to reduce the cost of capital. How to unlock technology and data to have right kind of products that could solve this thing. And third, how we can make the distributions much more, business amenable or affordable to the enterprises.
I'm going to take your third point on distribution, where you also mentioned there needs to be some public support. I'm going to take that and go to Sabine. Dr. Sabine, your experience across multiple geographies, right? Working with UN, multiple countries during COVID times, looking at Obamacare inside out. Public partnership, public-private partnership, that, where do you see that role being played? Again, keeping that lens of tier 2, tier 3 cities, inclusion. Where do you see, as a few examples we have seen abroad, any new ideas you see are being tried in India?
So India right now, of course, as we all know, is a young market for insurance innovation, but moving at a breakneck speed in building some of those. So I'll start with an example. Right now we are building a product with the state insurance company in Saudi Arabia with ISDB, which is Islamic Development Bank, to finance skilling of nurses in the North African region, in Morocco, Algeria, in Libya and Egypt. These are technically clustered as LMICs in this space. So to skill these women, to fund their entire regulatory protocol, their mobility, and create a tech platform so that their their salaries can also cover the risk of employment for them, as well as the risk of payment for the insurance company. The development bank, the insurance playing the part of the government here, come together with private sector entities to build a PPP model. So similar such skilling protocols can be used, and this is just one example. There are several such in areas where industries come into play. But this is more impact oriented. This is more about bridging different gaps within separate countries and separate governments and coming together. So such models, I believe, would be very effective even within India and bridging both. And we actually have a model, right? Vishwakarma scheme was one, but we don't really have a risk cover within that. So recognizing such models and scaling them up for different segments of work would be very interesting in my opinion.
Great example, Dr. Sabine. I can see how we could actually do it across a few states. Nurses, as the example you said, if I'm not wrong, it's one of those top 10 skill set that we export to various countries. Great example. Thanks for sharing. Rahil, coming to you. You have seen a lot of these fintech startups being scaled from ground up, and again, building on what Santosh shared as his first point, the data and the tech play, right? Again, I'll ask you to give us some examples, but based on that experience with fintech and InsurTech innovations and investments, which you think are the most promising, both either happening in India already or something that you've seen outside India that if it was being run by somebody in India, you would be the first one to write the checks? An example like that.
No. Okay, this is on. No, thanks for that question. I just wanted to add a couple of points to what Santosh had said earlier, which is this notion of public-private blended capital, especially from like a equity investor lens. We see this globally. I think it's very much needed in India as well. You do need some shape of public funding or grant funding to get it off the ground almost. I think from an equity perspective, though, I just want to have that one caveat, which is it's very important that the concessionary capital is something that is catalytic and helps set things up, but not needed for the long term. Right? If you do that, then I'm not saying that it's not viable. It's just then not like from an equity investor or a VCP kind of play, it then becomes kind of challenging. And that's one distinction, at least when we look at from an equity perspective. You wanted to add to that? Yeah, please.
So I think I have had the privilege of investing in a couple of deep tech companies, and it comes back to the same thing. The initial building of either economies of scale or building the cost by achieving economies of scale should be aided, but the business model needs to be sound enough to stand on its own legs later.
Exactly. And then just seeing that difference in the model for what it is in the now versus what steady state looks like has to be just well distinguished. Coming back to your question, which is, what do we see? At least for our fund and our thesis, I think we have a very large embedded finance thesis. We've made some investments in InsurTechs in India, globally. I will be the first to admit, I don't think we know what works. We're still evolving, we're still learning. We have a lot of what doesn't work as well. But on the what works, I'd say a couple of things. One example that we've seen really well and do really well, and we're seeing, is parametric insurance in agri. I think agri in India, again, Santosh made this point of where tier 2, tier 3 cities are. That's the big market in India. And when you look at that, agri then becomes a really big market. The other big market in India is MSME. It's highly, highly, highly underinsured. It can be both a market as somebody who needs insurance. Also, it can be a channel to access to employees and individuals, a B2B2C model. From that perspective, which we've seen in other geographies as well. And again, from a thesis perspective, we believe insurance being a push product, the intermediaries are just essential, right? And when you look at that, this embedded finance play, what we are seeing, and one example I have in India, is in the agri space, right? It's an aquaculture platform, but they are now embedding an insurance product. They're full stack. They sell inputs as well as then help with outputs, but they also have some IoT devices that help monitor. But all that data that's being generated is helping insurance companies design a product, right? And then embedded. Then the cost, you're not looking at the cost as a standalone, like, oh, I'm buying insurance, like, and this costs this much. But if you're buying feed, and then it's just like, it's either, you can price it in a way that it goes up in the discount, or it goes in like, in sort of like advance payment. You can do a lot of things to make the price look a lot more amenable to somebody who wants to purchase that, right? So there are many ways to think about how you do pricing for that from an embedded finance perspective. And they're purchasing a product which is so essential that then adding something on which is like another 1%, 2%, is not necessarily thought of as anything different, right? So these models of accessing that customer in that hot state and presenting the product in a hot state and just changes the decision-making tremendously. So I think we're really very bullish on these embedded finance models. I'll give you one other example. This is relatively new. We've seen this in the US, something called surety bonds, right? So whenever you are bidding for a project in India or anywhere, you have to put capital up front, or you have to have a bank guarantee. Right? Bank guarantees, you just look at the amount you need from bank. First of all, bank guarantees are very hard to get. To get a bank guarantee, you have to put capital down. And MSMEs are excluded largely from a lot of these projects because they can't access this. Surety bonds as an insurance product is such a fascinating concept. It's scaled outside, it's a very common thing in the US. It doesn't exist in an Indian market. Could that be another kind of innovation that we see over here that could just unlock for MSMEs? Anyways, we know MSMEs are under-penetrated. This would be a great product, again, from a revenue-generating perspective for an MSME that could just change the game.
So, I had a question on so we are working on this impact report with CGT-MSE. For the impact that they have created with credit guarantee systems. And, the data is pretty fascinating on some things. So they have, within that circuit in the last 1 year, they have, around 3 years, about 15,000 MSMEs which have jumped categories, right? From micro to medium, medium to small, and some even 2 categories at a time. Now, in spite of that, at least one of the metrics that we were exploring was the number of employment, right? So number of people employed, and that is underreported by more than 70% because a lot of them are structured out as contractual. So do you think, and that of course affects them from a tax to a credit perspective. So do you think that kind of, practice, which is more prevalent in India than in other areas, would affect something in terms of insurance being used, or rather MSMEs being used as a route for a B2B2C model?
I think anything that increases friction is bad. So if you're going to put 5 more questions, as it is, as I said, it's a push. And again, I sit on boards of NBFCs that are customers or CGT MSE. So it's a phenomenal product. Obviously, we can argue and quibble, I want this, I want that, but fantastic product. It's actually changed. I think it's changed a lot for at least MSME lending. It's also you're asking your intermediary, which is your lender, to, as it is, they're collecting so much data, KYC, blah, blah, blah. Their TAT is whatever. Everyone's kind of like focused on how do we make my TAT 15 minutes from 1 hour or from whatever, 7 days to 2 days. And then you're asking them a question which is vague. What's a seasonal worker? Is someone who's my household, should I count that as a worker? Should I not? It's who is the field person who is, she or he savvy enough to navigate like a multi-step questionnaire, which seems very simple to collect, but it's very difficult because we don't have the nomenclature is not black and white. So I would say just don't do it. I know it's not a good answer, but that's what I would say.
There are at least 3 actuaries within the India InsurTech Association who are friends whom I can go and say, these are the questions you're making, man. But I will come back to you, Santosh, in 30 seconds on that agri insurance and weather insurance, because you were sharing some examples. But before I go there, there's one model I've seen in Singapore which came to mind as you were saying, private-public equity partnership. So in Singapore, there's a model that the Singapore government does where if a VC puts in money in the company and they are, the VC is pre-approved by the Singapore government then matches up to a certain amount, up to $2 million. And they even do profit sharing with those panel VCs, which actually allows the VCs to take a little more risk. And you're correct, this is not growth capital. This is the seed to Series A capital just to get them started. And that's when the public-private comes in. So back to you, Santosh. You were sharing some examples on agri and weather insurance. Could you share that again before I go to your next question?
Yeah, I think just adding to the point on public-private partnership, I think India has a lot of these initiatives, but they are not at the kind of center that you can see them. So like the global institutions like IFC and others, they have several equity funds looking to invest into these sectors. They co-invest. I think IFC has one facility. In Africa, there are several. So I would like to point out one facility. It's called Africa Risk Capacity, which is a multi-country, multi-stakeholder initiative that provides insurance, reduces the cost of insurance by blending the capital to multiple regions in Africa. And that has been a great example of how you can get an insurance product to be available to multiple countries, multiple segments, and do the right kind of pricing. There's also a challenge that catering to one segment, pricing is very difficult. Coming back to the the agriculture and the weather and I think India, agriculture-dominated country, we don't have the right kind of product. So even if you see the agriculture insurance that is there, is barely covering the loss. So we need more products, and there are 2-3 examples that I can quote. One is obviously the parametric and index-based insurance, but in the context of the new climate that we are seeing, we are also looking at products which are weather derivative. What it means that you are not going to be in binary that, okay, you lost the crop or rain happens or drought happens. They see that, okay, if rain was supposed to be this, but it is 30% lower, you can get payout for the proportional loss. That provides a very good support for them to have a baseline for the income that, okay, I will get this much of this. That's one. A second category that is emerging very huge and the governments are looking for the catastrophe insurance. Cat insurance is the governments are the buyer, but we don't have the right product. So if you look at the cat insurance, it's one of the areas where countries like India are looking to see how we can transfer the risk that is on the government to the market. Insurance is a big product there. Several examples there again, but not at a scale that we can talk about. India always has this problem of a scale, so sometimes we talk about the scale as a very, very good thing, but you also have to see that scale when it comes down to the negative part of that. So you scale it to one part of these things, it's very difficult to do that. So innovations are happening here, and I think the way I work with the policymakers, there is a huge concurrence that some insurance has to be public expenditure, otherwise you are not going to meet the development goals of the country. So as you say that the political ambitions of elections, etc., there's a big, group that is not covered and that would come. So public finance is driving a lot of discussion on insurance. I think I would say that the companies who are in this room, if they have a product that clearly said that this segment would never get insurance if you don't subsidize this, you are more likely to get public-private partnership.
On both the cat bonds and surety bonds, right? Like surety bonds, I know a friend in Calcutta trying to do a business, same problem, right? He has got a contract of 1 crore to build a hall like this, and he has been told to get a bank order. He's like, where do I get that? Now, but those haven't picked up. Is it purely because at the stage of where we are as a country in economic development? Is it because it has to be seeded by government? So I'll ask both of you to comment a little bit. What's stopping it, or is it just a matter of time?
I think cat bonds, I think, is much more policy framework issue. I think surety bonds, I do believe the market can solve for it. But you do need to have insurers who are interested in this market to then design products and work with the nimble fintechs. Right? At the end of the day, the risk taker is a highly licensed entity, right? And that's not, we can count how many there are. So they have to be the ones who want to provide. But I think the market is attractive enough, large enough, and there's demonstrated proof points that it works. You now just have to figure out underwriting to do it. And the advantage, I believe, is there is such a big demand that you can price it in a way that you should make money. There's no competition. Of course, competition will come, but until then, why not?
I can see the surety bonds being one of them. Okay, I'm going to switch back to health, Dr. Sabine. So, on the health side, right? We are talking about catastrophic insurance. We are talking about surety bonds. But back to this examples that you gave around the nursing community, right? Are there anything else you see that is happening in India in the digital side of things, right? In terms of the government's push for health insurance at the hospital level. Today I was having a chat with, again, Dr. Virmani. He was talking to Professor Sethi from IIT Bombay, where he can't run large language models because he doesn't have the data, right? So people are talking about AI, but that data is unavailable at the university level at IIT Bombay to do research, right? Back to that inclusion on the health side, anything that you see can be a needle mover, an idea that some folks here can take away and say, okay, this is something that looks closer to my business, I should give. Specific on the health side.
So before I jump on the health side, because my bread and butter, but the point is, I think one thing to add to both of what you were saying, one is that whether actually can be extrapolated into other businesses apart from agri, though agri is the most affected. As you were saying, construction business, again, something that is very susceptible to weather changes. So the market is much bigger than just agri for that. And what you said about that, in terms of what are the challenges for such surety bonds requirement, I think one of them is also data and definition. The underlying data still, I believe, has its challenges because data corruption at source is one of the problems coming to health, is the problem that we face. Not the lack of data, it's lack of structure within data and massive corruption of data at source. After finishing, say, a 48-hour shift as a surgeon, what would I do? Do I have the time or the energy or even the mental space to dictate? No, I'll probably just do a structured model of what it was and maybe make a few edits if at all I have the energy to do it, or I'll pawn off the data entry work, which mostly happens, to a subordinate who might have accompanied me. So the decision making and the data that we need to capture the process of decision making also in this space, because when it comes to health, there are two kinds of decisions, the macro decisions and the micro decisions, and both of them have short and long-term effects. And that is one thing that we need to capture within the whole process of underwriting to be able to price it right. Even at a mass scale, I'm not even talking about variable pricing at this stage. Even to price it right at the front end, we need to be able to do that. So, I mean, that's a much larger problem, which even I don't think I have the solution for, and I think we will take some time as an industry to grow into a solution. But what we can do at the moment is, within health, push VBIS systems, value-based insurance systems, which largely focus on pushing screening and primary risk assessments at day zero for the patients. So we need to look at them as patients, not just as clients, right? Because we are part of a health ecosystem. We are part of a place where care needs to be, uh, you know, facie in the focus. And the whole point is that insurance is the only industry that actually can benefit from better health outcomes. So why not take that advantage and push mass scale screening models, which can not only gather the primary data from the health side, but also create socio-demographic data sets that you can use for several other products as well. So health being a universal need can be used through screening processes. So I believe that as an industry, if we are able to build out solutions which are screening first, as in actually looking at health technology from that lens, then we will be able to really go into the right pricing systems, even from a hospital treatment perspective.
Oh, I got the ding. Before I start looking to summarize, another 6 odd minutes left. Any questions from anyone? Don't think so. Okay, then I will do a quick summary before I hand off to each one of you for 1 minute to end. Some of the ideas that I just heard, like the surety bonds, agree is there, but bundling that with the point of sale for the farmers, these are things that if we are being discussed here, which means somebody in India is possibly working on it, and there are hopefully next time when we convene, we'll be talking of examples that has gone, right? So that's what I walk away, that there are these ideas that has worked very well outside India. The nurse idea was phenomenal, which we will see coming back into India and hopefully allows into the more inclusion. I'll hand over one by one for a quick summary of anything else.
I think, since we are in the InsurTech forum, so all kind of insurance product for the low income household, for the development outcomes depend on a lot of data that is critical for doing the right pricing. I think data as public infrastructure and a lot of sensors are going to unlock new products. I'll give you one example, which I talk mostly on the climate side. Climate is going to be multidimensional, so impact would be on all the sectors, not only on the infrastructure, health, everything. The big problem is that the climate data, satellite data, all these big level data, event level data are there. What we miss is that the event interplaying with the asset. The asset vulnerability data is not there, and hence it's very difficult to calculate the risk. So one of the key things that is happening right now is how to get those data sets that you can have event as well as the vulnerability, right, so that you can calculate the risk. So as InsurTech, I think you have to champion that how we can unlock new data sets that can reveal the price of many segments that we're doing. That's my kind of final.
And someday we can partner with the likes of climate bonds that we have today and build, blended products around those. But coming back to health, I think one of the things that we have in insurance, which is something that we don't understand, is one is we have a very clear, alignment with the patient's outcomes and care. In fact, it's interesting that I've never seen an insurance company actually talk about that. That, we are pretty much the only people who care about you staying well or getting better. So that is one thing. But that and the access to large scale provider networks can be used, and because we are in InsurTech, so can be used for data collections and using new technology to first build out into using the provider networks to get technologies to reach the end consumer, and then using that technology itself, be it medical devices, be it drug technology, or be it biotechnology and processes, to get the data and the solutions necessary for better health outcomes. I think we have a two-way approach that can be used through insurance platforms and networks, and it's high time we start exploring
those. It's hard to go after these guys. But I'm just sort of thinking about this discussion, and as opposed to summarizing, I think there's a few things that we haven't touched on, right? I think one is what technology can do, right? There's two things that are perhaps in technology that are just like, one is AI and generative AI. Like when we talk about data sets not being there, can generative AI start modeling and generate data sets to help. And I know it's not perfect, but it can go a long way and sort of reduce the gap or maybe just help move the things faster. I think generative AI is one powerful tool that I would, I think the Indian ecosystem, when you talk about startups, are really looking into. And then the other one, I think, and it has come up, but tangentially, is the role of having to work together. I think insurers, distribution, the tech platforms, the data platforms, everyone's sitting more siloed and everyone doesn't understand another person's language. Creating that opportunity to sort of sit in that same room and say, look, we have to solve for this. It's not easy, but I think that's what's going to definitely move things forward.
Thank you, everyone. Great conversation, and really appreciate your time and hope to see you guys again. Yes, sorry, Dr. Sabine. Yes.
One thing, that tech is not just, it is data platforms and AI, but it's also like going into something as thing as longevity tech in biotech areas, looking at, tech in medical technology and medical devices, because at least within healthcare, you can also touch base with these technologies and build systems around it through insurance as a baseline.
Thank you, everyone. A round of applause for my panel members, please. Thank you.